So it's absolutely flat, 7-8 point change on the Nifty. The mid-cap index is down 0.5%. The small-cap index is down 0.4% as well. Bank Nifty is still holding about 0.5% higher at this point in time. So as we've been saying, some consolidation after days and end of endless rally. Manisha is here as always at 11:15 to run us through what's happening in the world of commodities. And once again, we are focused on what's happening with oil prices and the pulls and pressures governing oil. Manisha, morning.
Morning, Prashant. Thank you so much for that. Well, yes, 0.5% up on your screens yet again for the crude oil prices. And we actually seem to be getting used to this right now. But then there are more fundamentals which are bullish for the crude oil prices. Until now, we have been talking about the OPEC and allies who are pushing for deeper cuts as we get into April, especially Saudi Arabia saying that they will cut output below 10 million barrels and cut exports below 7 million barrels per day. Add to that the US output, which the markets have actually been under pressure with. The latest EIA report says that the US output growth also is expected to slow down in 2019, and the max that they see is 12.3 million barrels per day for this year. The other thing is the US weekly inventory data that would come in the evening today, but the API reports suggest a decline in the US inventories, and that is yet another factor supporting the prices on your screens. Joining us to talk further about that is Vandana Hari of Vanda Insights. Vandana, hi, good to have you. How are you reading various cues for the crude oil prices? We are not too far away from $70 a barrel. That is a consensus amongst various banks and brokerages as an average price for Brent for this year. How soon do you see we touching that mark?
Good morning, Manisha. So definitely there are more supportive factors from the fundamental side for crude, as you were just outlining. On the supply side, market attention has turned to OPEC reducing, and not just reducing, but in the first 2 months of their cuts, they have reached close to 100% compliance. Aside from that, of course, not to be missed the fact, especially after last year's experience of OPEC actually over-tightening the market beyond what they had pledged to remove, the same might be about to happen again this year as well. So the three OPEC producers that have actually been exempted from cuts, Iran, Libya, and Venezuela, are also producing much lower than what they were producing last October, the baseline that OPEC has used. Saudi Arabia is cutting way more than it needs to cut. So overall, supply intentionally as well as unavoidable reasons in a few OPEC countries is tightening pretty fast. That's a major factor. I think on the financial markets front, that has been the major guiding force for the oil market since last October. And there as well, there's been a lot of optimism of late over an expected deal, trade deal between China and the US.
Sure.
So overall, things are looking positive for oil for now.
So what's your sense on the prices moving forward? Excuse me. As I said, 70 is something that we seem to be inching closer to every single day. Markets, of course, as you said, will watch out for US and China trade deal. Brexit is yet another one. We have a lot of data coming in from US today, and China tomorrow will come out with its retail sales and business confidence and fixed investment, etc. So how moved would you be with all of this economic numbers coming in?
Yeah, I think it's logical for the market to look at the next psychological level, and that is 70, which is not too far from where we are sitting right now. Crude is already close to 3-month highs. Brent eyeing 67 again this morning. So, look, 70 looks within reach. I think probably a bigger question out there is that have all the things in the world that were weighing crude down since the fourth quarter of last year, have they all definitively turned positive? And I would say probably not, because, even with the US-China deal, which is like the biggest factor buoying the stock markets and investor confidence, there are a lot of ifs and buts. I think also we've heard a lot of negative news and data from Europe through last week. So, look, in my view, and then, of course, there is the U.S. growth. Yes, overnight the figures suggest that the EIA might have been a little bit over-optimistic on U.S. growth, but all said and done, it is expected to still grow strongly this year. So there's plenty of supply coming from the shale sector in the U.S. So overall, I think there is a good degree of balancing.
So, Vandana, are you calling 70 a top, or do you think there are chances that we might see prices go beyond that?
I see 70 as a top for now.
Okay.
Things could change. There are a lot of flashpoints, and suddenly you have major supply disappearing, and for instance, Venezuela, that could happen. It could go beyond 70, but right when it happens, mark my words, you'll have Trump and probably leaders of the emerging market countries as well pressuring OPEC to open the spigots again. I mean, they are withdrawing a lot of oil from the market, right?
Absolutely.
I doubt very much this year they'll be allowed to continue doing that while prices continue to rise.
All right.
Vandana, thank you very much for joining us. Manisha, I appreciate you joining us and taking us through that conversation with Vandana Hari there on oil. There are some flashes at the bottom of your screen. This is government officials to CNBC TV 18. Source base extremely challenging to meet FY19 revised direct tax aim of 11.5 lakh crores. Unused compensation cess may be shared between centre states to close the revenue gap. On the direct tax front, I think that 11.5 odd lakh crore number implied about a 19% growth. Yeah, exactly. So it's direct tax revenue growth is right now below 15% compared to the 20% run rate which was required to meet that 11.5 odd lakh crore number. My colleague Sapna Das is getting us a story, and she's joining us right now to take us through details of this, important from a fiscal point of view. Sapna, what are you hearing? Good morning.
Hi, Prashant. Morning. So basically, the picture that we are getting right now is that it's a bit of a struggle to try and meet the fiscal aims of FY19 as of now. Every year, some challenges do turn up as far as the FD number is concerned. But this year it's looking to be particularly challenging because, the tax revenue front consistently has not kept pace with the government's expectations. As you were rightly talking about direct taxes, the interesting number there to look at is the fact that the growth rate is somewhere around 14.7 to 14.8% currently. That was the rate that was required to meet the budget estimate, which was 11 lakh crores. So if you go to the RE number, the growth rate would be above 19%. That's the required run rate. They are nowhere near that. So that's the one big challenge that we are looking at immediately. And mind you, in the FRBM statement in the budget, at the time the budget was presented, government had mentioned this point very clearly that the GST shortfall, and there was the RE is lower by around 1 lakh crores. So already that much they are expecting to absorb in FY19 in terms of a lower revenue number. Apart from that, they have said that to make up this gap, basically they will be using a higher direct tax number of by 50,000 crores. And all of that is for corporate taxes. There we are getting to understand that probably the picture has turned sluggish after the December quarter. So that's where we are as of now. Of course, the advanced tax numbers will come post 15th March. They will keep getting updated right up to the end of the financial, probably even spill over into 2nd and 3rd April. But whether that kind of traction will be achieved, it's a very big question mark as of now. Having said that, the similar story is...
Just a quick follow-up. In terms of the divestments, can we expect something more probably towards the end of March for the next 2 to 3 weeks?
Well, divestment has turned into an interesting story as of now. What we are given to understand is that, of course, the CPSE ETF, that again is a big surprise. The 4th tranche is opening on 19 November. Government is looking as much as that 10,000 crores to be mopped up from there. So that is one number that we should be keeping a watch on. And of course, apart from that, you see the REC PSE deal has yet to unfold. So those numbers are somewhere in the public domain as far as the estimated revenue inflow is concerned, around 14 to 15 odd thousand crores. You are already somewhere around 60,000 crores in terms of divestment receipts, minus both these two major developments which are on the annual. So clearly there you're looking at actually exceeding the target, and that may come as a bit of a relief. The other big point that we should now keep a watch on is almost all the ministries have been told to slow down on FY19 expenditure. There was always some narrative here in the sense that probably every year something used to happen of that kind. But this time, I think almost all the financial advisors of various ministries are being told that, government will never use the word cut. So, savings or at least kind of slow down. And plus, being an election year, there was always a trend that somewhere, your numbers used to be not that great. I mean, you may have a certain B or an RE, and you may be somewhere below that in terms of the actual expenditure. So that's going to be a big relief point for the government in trying to meet the 3.4%. Last week, DA Secretary was very clear that on the whole, they will be at 3.4. But it's important to bring out this narrative as to what are the pressure points right now and how is it that the government is going about to meet the number.
Okay, all right, Sapna. Important details coming in there. Thanks very much for joining in and giving us that update. Remember, the CPSE ETF, in fact, opens on the 19th of March. That is next week. And the government is looking to raise up to around 10,000 odd crores. There is a green shoe option of around 6,500 odd crores. So that would be an important development to watch out for as well.